Hello friends, welcome to my channel. Today in this video we shall discuss about mutual funds, what it is and why we should invest in mutual funds and how you can invest in mutual fund. Now first let us see some calculations. Okay. Now I have made this first slide related some expenses that actually we do or we will do. Okay, now here as of now, that is year 2023, now reputed private colleges, you need the course fee to pay. Now what are those amounts of the course fees? So currently for engineering course we need to pay 4 lakhs, for MBA course it's for MBBS course, that is for medical 21 lakhs, and for MBA it is 24 lakhs. So these are the course fees. So present value of the fees in the different private colleges for engineering, medical and MBA. Now the inflation rate is 8%. I am assuming this is the average I am picking as 8%. Okay, and for example, after 15 years you will admit your child in a engineering college or medical college or MBA college. So in that case, what the amount of money you need to pay for the course fees only? For engineering, you need to pay 12,68,000, that is 13 lakhs, almost 13 lakh. For medical course, it's 66 lakhs 61,000, that is almost 67 lakh. And now for MBA, it's 76 lakhs and 13,000, so that is almost 76 lakhs. Okay, so now you need to plan accordingly so that you can save that money for the future of your children, right? Now if I consider the investment in mutual fund, you are investing some money in mutual fund to gain that wealth after 15 years. Now mutual fund gives around on an average 15% return of investment for long term. So I am picking 15% as long term. Now for that, per month you need to invest 12,994 rupees, so that is around 13,000 per month. Right from now you need to save. For medical courses you need to save 68,000 right from now, and for MBA you need to save 77,000, almost 78,000 right from now. Then you will get this amount of money at that time with respect to 15% return, but return may be higher also. So savings is important. Now let's come to the next slide. Mutual funds are subject to market risk. Okay, so this is the common thing that everywhere you can find, that mutual funds are subject to market risk, and you must read the offer documents carefully before investing. Okay, but it diversifies the risk to minimize investment risk, so in long term you generally get a huge profit. Now the point is, what is diversification and how the risk is diversified? Now let's see that thing in the next slide. Okay, now your money you are putting into the mutual fund. Now what a mutual fund does is they divide your money in different ratios and invest those monies in different sectors in the market. For example, infrastructure, real estate, gold, bonds, equity or share market, debt fund, etc. etc. So here basically for a certain time maybe infrastructure is down, but you get enough return from real estate or golds, okay, or bonds, maybe debt. In the debt fund there is almost no chance of losing your money, okay. So here you are getting sure short monies, maybe one or two sector may be down for certain period of time, but generally for long term again they come back and grows. So in this way basically your money is kept safe in the mutual fund, or it is diversifying the risk, so there are less chances that you lose your money, okay, or get less return as expected. Now we will see some historical performance of different mutual funds in third, fifth and 10th year, okay. Now first let's come to the LIC mutual fund, okay, direct fund, growth sectoral, the direct one. Now in 3 years it gave 32% return, 5 years 17% return, and in 10 years it gave 18% return. So it's quite huge return. You can see 18% return is a huge return for long term, okay. Same for the LIC, another fund you can see 30, 15, 16. Tata's you can see Tata 3 years, these are no record available. So now 39%, 37%. So these are huge return. So these are unbelievable returns. But we need to plan for long term. Okay. Short term 3 years is a very short term. If market goes down, then it might be difficult for you and you might lose your money. So always plan for long term, even if it is 18%, which is much lesser than 32%, but yet it's a good amount of money. Okay. So we have also SBI, HDFC Canada, Reveco. Okay. Now let's see the returns of all others: 16, 17, 16, 18, 22, 21, 25, 24, 24, 23, 24, 22, 20. So these all are the returns that you can see in the different mutual funds from the historical records till 29th of August 2023. So you can also get this data from the internet. So in the internet this data is available. You can search and find the performance of the different schemes of mutual funds there. Okay. Now why you will go to what is the purpose that you should invest? Number one is child education. It can be buying a home, it can be buying a car, it can be the child marriage or retirement plan. Even you can save for travel also. Okay. Now why to invest early? This is very important thing you must know. If a man starts investing at his 20 years of old age and 10,000 per month, and if the annual return is 15%, at the age of 50 years you will get 70 lakhs 97,000. That means around 71 lakhs. So this is the figure. He is investing from the age of 20. And another guy who is 30 years old and now he has started investing and he is investing 3000 per month, and L1 return is same 15%. At the age of 50 he gets only 46 lakhs. That's the magic. That's a real magic. So investing early is a wise decision. So don't wait for invest, but first invest and then wait. So this example basically tells you that do not wait to do the investment, but rather do the investment and wait. Okay. For example, say you and your friend. Now your friend has started investing from his 20 years of age, and you have started from your 30 years of age. Now your friend will get how much money? 71 lakhs, and you will get 46 lakhs in the same age. So that's the magic of investing earlier. Now we invest in different mutual funds. There are SBI, LIC, Tata, HDFC, Axis, Canada, DSP, Nippon, Aditya Birla, and many more. So I have just listed only few of the reputed companies here. Now if you want to invest, you can WhatsApp me in this message, or a link I will give you in the description box. Using that link you can do the investment with me. Okay. And apart from that, if you want to do your investment by your own, then you need to search any of the well-known applications. There are different types of apps available. From there also you can invest. Okay. And if you want to do this with me, so please WhatsApp me in this number, and you can also follow the link. I will give that link in the description box below. So guys, thanks for watching this video. Hope you enjoy and it is helpful for you. Please like, share and subscribe my channel. Thank you very much for watching this video.